Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so grateful for life and thankful to be here with you this morning as we take another fresh new look at the financial market. Well, before we begin the session today, I would like us to confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly without distortion, uh, type in hi in the comment section, as this will help me confirm that we are all on the same page. So I would like to see some comment, please. I would like to see some feedbacks. Just type in hi and I will get the nudge that we are good to go this morning. So let's see what we have here. I think we have some handful of comments. I can see Oscar Delta 8307 71977 51201. I also see 31672. Okay. 3592. Rosie Elho, good morning to you too. Hello, Carrie. Good morning to you and glad to have you around. 0568. Thank you very much for that feedback. So I think with this handful of comments, I will take this as a positive feedback that we are good to go this morning. So it's on this note I welcome you all to yet another promising edition on the Extra and Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we delve into the financial market, strategically looking out for trading opportunities ahead of the New York session. As usual, I have conducted a comprehensive price action based technical analysis on all of the assets on our watch list for this week, which include the USOILSPOT, the USTech100, the XAUUSD, popularly known as the gold spot, and of course the USD So as usual, we shall be using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movements of these markets. So with the groundwork laid here, let's dive right into the business for today. I wouldn't forget my newcomers. For those who are new with us, for those who are joining us for the first time, you're highly welcome. And you might be asking, what are we doing here? Well, we come here together on a daily basis in anticipation of the New York session, where we review our current positions and at the same time strategically position ourselves ahead of the New York session, looking out for simple patterns and structures that we can use to guide our trading activities for today. And in fact, this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And the more time you spend with us, the better you get to understand how things works and eventually be able to use the information you have gathered here to make your independent trading decision. So with that being said, let's dive right into the business. And as usual, the first thing we want to be doing here is to check on the economic calendar. As we all know how these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns, hereby giving us valuable information that will help us in positioning ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. So for today, August 22, Tuesday, we do not have any high impact event. You know, we normally focus on high impact event from the economies that affect the asset we are looking at, which are the United States, the United Kingdom, and of course the Japanese economy. But for today, August 22, we do not have any high impact events. So I took a step further to include the medium impact event, as we will need some gauge that will help us to position ourselves for today. So since we have medium impact event, let's take them into consideration while we get ourselves prepared for the New York session. So the first one here is the existing home sales change, which is featured from the US economic docket. And this is normally released by the National Association of Realtors, and it provides an estimated value of housing market condition. As you all know, the housing market is considered as a very sensitive factor to the US economy, and this generates some volatility for the US dollar too. Generally speaking, a high reading is considered as positive, while a low reading is considered as negative. Now, if we look at the previous data for the month of June, it came in at minus 3.3%, and we do not have any consensus yet. Probably we could have something to gauge our expectations, probably an hour or two before the event happens. But we are going to be looking forward to what the actual data is. Will it be beyond the previous data, which will of course be a positive signal for the markets? And of course, we want to see how the market would react to that one. Then much more later in the day, that's about 7 to 8 hours from now, we are going to be witnessing the Fed's Bowman speech. She's an American attorney and a governor on the Federal Reserve's board. So she's going to be having a speech in about 7 to 8 hours from now. And of course, being a governor of the Federal Reserve, whatever she says today is going to be giving us an insight into what to expect from the Fed's chairman, which is coming up much more later in the week. That's on Friday. Then we also have another speech coming in simultaneously. Goolsbee is the 10th president and chief executive officer of the 7th District Federal Reserve Bank of Chicago. And of course, he's also serving as a voting member of the FOMC, that is the Federal Open Market Committee. It's also going to be having a speech today, and whatever it says here also will be giving us an insight into the monetary policy of the Federal Reserve, and of course give us an insight into the health situation of the United States economies. So these are medium impact events we are going to be looking at, but as technical traders here, what we are going to be doing is to dive into the chart and then look out for patterns in anticipation of this event that we can use to position ourselves to capitalize on any potential move. And of course, we all know that the anticipation of this event would reflect on the chart as price action. So talking about price action, we shall be diving right into the chart to look at things from a technical standpoint. So the first asset on our watch list for today is the USOILSPOT, I think. Hold on a second, please. So the next asset on our watch list is going to be the USOILSPOT. And in fact, on the USOILSPOT, as at yesterday, we were expecting a bullish momentum, but we were still contemplating on where the bullish momentum will begin from. Though the new week started on a very strong bullish note, as we saw. Let's run through how the week started for us and what led into the idea of us considering buying opportunity. And of course, we also considered the potentials of sellers too as well. Now, at the beginning of this week, price was initially caught within a range, but with a little bit spice of bullish momentum that came up with it. Now we had this beautiful range here between where price was confined within the $81.40 level and the $80.50 area to give us a flat channel to work with. Though we saw price break out of that resistance line a little bit, price came back, but unfortunately for buyers, price dropped significantly well to the downside. And one thing I mentioned here yesterday is that we are going to be looking out for selling opportunities if we have a breakdown of both the 81 and the $80.50 level, which actually happened. So we saw price break down the structure, and in fact, if you had missed out on that one, we saw price come back to retest the structure to incite another wave of bearish momentum, and since that moment, price has continued to drop to the downside. So on this one, we should be having a minimum of 3 positions running in profit right now. Remember, we had one at the $81 level. We also added another one at the $80.50 area. And of course, we added the third one at the breakdown of the $80 area to give us 3 positions currently running in profit. So the first position is running with about 125 pips in profit, while the second one is running with about 70 pips, and the third one is running with about 21 pips in profit. So we have over 200 pips right now running in profit in our favor. And you know how we do it in this community. First of all, congratulations to those who took advantage of these opportunities. And you know how we do it right now. The next thing we want to be doing is to move all stop losses to secure this current sell position. And I'm of the opinion that anywhere above the $80 area and the $80.40 seems most appropriate to move all stop losses to. And the reason why that is, you all know why. We want to ensure that we give enough room for price action to breathe. Now, with the situation here, with a well-secured position, what is going to be our next line of action for today? And in fact, before we can deliberate on what our next line of action will be, remember that price action has been on a very strong bullish momentum, and in fact I would like us to revisit the higher time frame so that we can see how we can align the structures we have on the higher time frame with that which we have on the lower time frame to make a well informed trading decisions. So zooming into the 4 hours time frame here, let's look at it together. So right here on the 4 hours time frame, this was what I was able to share with you at the beginning of the week. And in fact, we took into consideration the nature of price action since the mid-month of June. And one thing clear here is the fact that price action has been on a very, very strong bullish momentum, as you will see here. And after connecting the series of higher lows, we were able to identify a couple of ascending trend line which has been supporting that bullish momentum. Now, if we zoom into the current structure, besides the ascending trend line are a couple of levels here that we identified yesterday, and one of the levels here is the $78.50 area, which has been a major determinant of price action since the month of July. So we saw here that since price broke above this level in the month of July, we've seen a situation where price has remained above that level to emphasize the strength of the buyers. And in fact, at every point in time that sellers tried to break through the structure, we saw how buyers came in to negate all bearish attempt at this level in the market. Now, the other thing we also observed here yesterday to further help us to guide our trading activity was the fact that throughout the second half of last week, price action was more, I think in the last 2 weeks now, price has been on a bearish note. Since price tested that high at the $84 level, we begin to see selling pressure resume. And since then, price had consistently found lower lows and lower highs in this market. And as a result of this observation, we quickly connected a series of lower highs, and then we had a descending trend line that we are supposed to use to guide our trading activity. Now, in addition to that trend line is this reversal pattern that we spotted here, which looking like a double bottom structure, as you will see here. And of course, we had the neckline of this double bottom around this area at this point. And of course, one of the things we look out for whenever we have a double bottom structure is for price to break out of that neckline to validate the potency of that reversal pattern, which of course we saw last week. And one of the things I stated here yesterday is that we could see price climb and continue to the upside, or we could witness a scenario where price will come back to retest either the neckline or the descending trend line that was broken. Now remember, we had this descending trend line. Let me highlight that for the sake of clarity. So we have this descending trend line. Remember, we spotted this yesterday and we saw the breakout of that descending trend line around the $80 level. And you all know from a technical standpoint, when price breaks out of a key structure such as this descending trend line and the neckline of that reversal pattern, we expect that some point in time price is likely going to come back and retest that structure in anticipation of an uptrend continuation. Now, it appears that price action is following through with our technical expectations here, as we saw this bearish momentum began yesterday. So I'm of the opinion that we might likely be seeing this bearish move go to the downside. Now, one thing here is the question we want to be asking now is how far will this bearish momentum go before we begin to see some reversal pattern that will incite another wave of bullish momentum. And of course, we shall be looking at this confluence here where the descending trend line, the ascending trend line we identified here, and of course the $78.50 level share a crucial confluence where we shall be looking out for the way price market participant will be reacting to this area to determine what our next line of action will be. So the question now is, are we going to see a situation where price will break down that confluence, retest of structure to confirm a sell-off in this market? That is one way to think of this market right now. Or are we going to be seeing a situation where price will come into this confluence where the emergence of buy pressure around the air will incite another wave of bullish momentum? So you can see how interesting the structure is, and this will require a lot of patience to allow structures to mature before jumping into any position. And the way things are going right now, after the breakdown of that $80 mark, we can see the sharp rejection of that level, which further emphasized the strength of the sellers around that $80 area, pushing price further to the downside. So if price continues to drop, then we have no other choice than to remain patient and wait to see how the market will be reacting to this confluence identified here. So now with the information we have gathered on the 4 hours time frame, let's scale back into the 1 hour time frame to see how we can capitalize on a potential downtrend if price continues to drop to the downside. Now, scaling down into the 1 hour time frame, remember we have about 3 positions running in profit, and I told us all to move all stop losses to secure the current sell position. So I hope you have done that right away. So with that being said, now look at the structure here. And remember, one of our key levels for the week is the $80 mark, a very strong psychological area. Now the price remains below that structure and continued selling pressure happens below that area, we shall continue to look out for selling opportunities. But there is one thing I would like us to take note of here, and that is this ascending trend line after connecting the nature of price action since last week, Wednesday. So we have an ascending trend line here, and I would want to see price break down that ascending trend line to give me more opportunity to sell the US All Spot. So for those who had missed out on the sell position we capitalized on in the last 24 hours, well, you want to be positioning yourself below the $79.50 level to capitalize on this opportunity. And for those who are already in a position, this will be a very good opportunity to add more position here by maximizing the potential of this bearish move. And one thing about this structure is that if price action will break down that ascending trend line, this will be the first time price will be breaking down that structure in the last 1 week, and a breakdown of course will be a signal that the trend line may no longer have the capacity to continue to negate that bearish momentum. So we shall be looking out for selling opportunities below the structure. And please note that as price move in our favor, we want to ensure that we are on standby to move all stop losses to secure this current position. Remember that we are on a very strong bullish momentum here. So, and remember, I identified a level at the $78.50 level on the higher time frame, where depending on how price action reacts to that level will determine if we are going to be adding more sell position or get ready to join any bullish momentum here. So that is one way we are going to be looking at selling the US All Spot today. However, if price action does not drop below the $79.50 level as projected, but instead we begin to see buy pressure resume around this area, which of course shares a confluence with our ascending trend line, then there are chances that price action will be respecting that ascending trend line one more time, just as it has been doing since last week Wednesday. And if that is going to be the case, then we will have no other choice than to get ready to join a buy opportunity. Now, to capitalize on the buy opportunity, we are not going to be buying right away when we sight that reversal pattern. Instead, we want to see price break out of that $80 MAC, where buying pressure above the structure on our lower time frame will be all we need to capitalize on an uptrend scenario. So for buying opportunities here, we shall be looking out for a breakout retest of the $80 MAC, and if that continues to push price to the upside, remember that we have more levels, multiple levels we can use to capitalize on more opportunities to buy the US All Spot for today. So you do want to be marking out these levels, as you will be needing them as a reference point to guide your trading decisions for today. So these are my views here on the US All Spot. I hope I was able to make things a little bit clearer for you. And in fact, if you need me to do further clarifications, feel free to let me know in the comment section. And in fact, if you have any questions, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you can also use that time to mark out these levels on your chart. All right. So in the absence of no questions, okay, I can see some. Okay, there are no questions, anyways. Alpha saying good morning to you. Glad to have you around. Dino, thank you. Okay, I wish you the same to Alpha Sin, and thank you for wishing us all here. All right, so in the absence of no questions, I want to assume that we are all on the same page here, so we shall be moving right into the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the NASDAQ. Now, in fact, we've had quite an interesting setup here, which has given us opportunities to buy. And in fact, we should be having a minimum of 3 positions running in profit at this point in time. Now, let's run through how the week started and what led into the idea of buying this asset. In fact, I would like to refresh our memories here by scaling up into the higher time frame, and for the sake of those who are not part of the live session yesterday. So we started the analysis on the daily time frame, remember, where we spotted an ascending trend line after connecting the series of higher lows, which further emphasize the strength of this bullish momentum in this particular market. And as you can see, since the beginning of the year, price action had consistently respected that ascending trend line. Now, it became more interesting when we noticed that last week's trading session closed exactly right above that ascending trend line, as you will see here. And in fact, not only closed there, we saw some signs that buyers are likely going to be coming in, hereby giving us a crucial confluence at this point in time. And one thing I said here yesterday is that as long as price remains above that ascending trend line, we shall be looking out for patterns and structures on the lower time frame to support that bullish momentum. And the only condition that will make us want to sell the USTech100 is for price to break down that ascending trend line, which of course never happened in the last 24 hours, hereby opening up the potential for more buying opportunities. Then after noticing the nature of price action along the trend line, we went down into the 4 hours time frame where we spotted a demand zone which has been consistent since the month of June. Now we saw since price broke above this level, we saw how buyers had continued to hold that momentum above the 14,600, which happens to be our key level for this week. And this was where price action closed last week's trading session. Now, with the scenario here, we had no other choice than to continue to look out for buying opportunities around that area since price remains above this accumulation zone we identified yesterday. Now, with the situation here, look at what happened here. Price has already broken out of that resistance line, giving us very good signal that we are likely going to be adding more position and then joining another wave of bullish momentum to the upside. So we have another level here which I would like to mark out, and that is the $15,000 mark. Very important level. Remember, this area has been a very key determinant of price action in the last couple of weeks now. So I would like to label it out, and of course we shall be using it to guide trading activities for today. So as long as price remains above that level, we will continue to look out for more patterns and structures to support the idea of buying that asset. So I would like this one to reveal itself on the lower time frame too as well. So this is what we saw at the beginning of the week. So scaling down into the 1 hour time frame, things became a little bit more clearer, as you will see here. So we noticed that at the beginning of the week, though there were signs of indecision going on in the market actually, as we saw price confined within the 14,740 and the 14,665 level to emphasize the level of indecision at that point. And you know how we do it in this community. When price action falls into this kind of flat channel, we want to wait patiently for either a breakout of the resistance line or the breakdown of the support line for an opportunity to trade. Now, what we saw here prior to the live session, I told you we had a breakout of the structure. I told you I had a buy position triggered at that point. And for those who had missed out, I told us all that we could have price come back to retest the structure, which actually happened a couple of hours into the New York session. And I do hope that you are on standby to capitalize on that move, as since then price action had continued to find higher highs and higher lows in this market. And remember that we identified a couple of more levels where we said we shall be adding more position if price breaks out of that structure. So we had one at the 14,820 level, and then we also added another one right here at the 14,950. So as at this point, you should be having about 3 positions running in profit with a total of, let's see, the first position is currently running with about 290 pips in profit. The second position is running with about 200 pips, making 490. And then the third position here is running with about 70 pips in profit. So we have close to 500 pips in profit on the US Tech 100, which is a very, very good start to the new week. And for those who are taking advantage of this opportunity, well done to you for being on standby to capitalize on this move. Now you know how we do it. The next thing we want to be doing here is to secure this current position by moving all our stop losses to lock in some profit. Now, with the way things are going right now, I will be suggesting that we have all stop losses placed anywhere below the 14,950 and the 14,890 area. Of course, we do want to give enough room for price action to breathe. So with a well secured position at this point, what is going to be our plans for today's trading session? Sorry for the breaking transmission. So, what we are going to be doing now, in anticipation of the New York session. So, like we all identified on the 4 hours time frame, the $15,000 mark, a level which has been a very strong determinant of price action in the last couple of weeks for us. Remember that we were looking at that level for selling opportunities during the midweek of this month, where we said a breakdown of that structure will be all we need to capitalize on a downtrend scenario here. Now, price action is back into that area, giving us a very crucial confluence where anything could actually happen. The buyers could take over and push price in their favor. The same thing sellers too can take over and push price in their favor. Now, what we want to be doing here is to try to position ourselves in such a way that we can capitalize on any move. Now, looking at the structure here, and from a technical standpoint, the $15,000 level is considered to be a key level, as you will see. And we've seen how that area had been a buying niche at some point in time during the second week of this month, as you will see here, before we finally saw the breakdown of that structure happened during the course of last week's trading session. Now, from a technical standpoint, when price breaks down of a key structure such as the $15,000 mark we have here, we expect at some point in time price may likely come back into that structure to retest it and incite a downtrend continuation. So this is one idea we never want to ignore at this point in time. So we are at a very crucial point. And the other scenario is price could break out of that structure, and that level could serve as a platform for buying opportunities to push price to the upside. Now, with the way things are going right now, we want to see, let me zoom right in. We want to look out for two things around here. The first one, to sell the USTech 100, I want to see selling pressure below the $15,000 mark, something like this, where buyers are finding it difficult to climb above the $15,000 mark. Then we scale down into our lower time frame to look out for structures that will support the idea of selling. Then we can sell and add more positions as price action goes on to break down these levels. So we have levels like the 14,950. We have the 14,820 to add more positions if price drops to the downside. And we also have the 14,740 to add more positions if price continues to drop to the downside there. So that is one way to look at selling opportunities here. However, if price action remains above the $15,000 mark, now one of the things we are going to be looking at here, of course, we have seen now that price had broken out of that structure, but one thing we should take note of is that the breakout we see here could still turn out to be a false breakout. And if it turns out to be a false breakout, they were likely going to see price drop below the $15,000 mark. Appearance of selling pressure could push price to the downside. So we will need a significant confirmation that truly buyers will be staying above that $15,000 area. And this, of course, would reflect on the chart as continued buy pressure around this area to join an uptrend continuation. And of course, for all of us who have been profitable so far this week, it will be quite easy for us to capitalize on a bullish opportunity above that level because we are already profitable, so we can afford to leverage on the profit we had made so far this week to test waters around that $15,000 area, hereby risking some of the profit we had made by just having a buy stop order there or buy right away, and let's see if this is going to click. However, if you are new and this is your first time this week taking the USTech 100, I will suggest that we see price break out significantly well. Then a retest of structure should be giving us a confirmation to join the uptrend continuation. Now, I would like us to visit the 15 minutes time frame to see what things are looking like there. Okay, nothing really much. So we still need some confirmations to join, but for those who are profitable so far this week, you can afford to buy right away, and let's see. But ensure that you have your stop losses in place. Very, very important. You want to have at least about 45-50 pips stop loss that will cover that range between the $15,000 level and the $14,950. I hope that is fine and okay here. So that is that on the USTech 100. This is my view. And if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next financial assets. All right, so in the absence of no questions, I want to assume that we are on the same page, so we shall be moving right into the next financial asset on our watch list. So I'm not sure which one was the one we took yesterday. Is it the GBPUSD or the XAUUSD? So give me a moment, let me confirm. I would like to check my history here for yesterday to see which one we took. A moment, please. I'm trying to. All right. So the next one we took was the GBPUSD, of course. So the next instrument on our watch list right now is going to be the GBPUSD. Now, on the GBPUSD, we have a buy position running at this point in time. I think we have a couple of buy positions running right now, and I will just go through how the week started for us and what led to the idea of buying this asset. So at the beginning of the week, we had a couple of parameters here. Well, the first one I was able to identify here was this descending trend line after connecting the series of lower highs here, giving us that descending trend line. Then we noticed that price action was confined within a range during the first 10 to 11 hours of the week at between the 1.275 and the 1.27250 level to further emphasize the level of indecision in this market. Now, with the way things were going, with a flat channel here, you know how we do it. Whenever we have a flat channel, we want to wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down of the support line to give us an opportunity to sell. And what we saw here was price initially broke out of that descending trend line, giving us a sign that the trend line may no longer be able to negate the bullish attempt, of course. And then we saw price come back to retest the structure. And I told us all yesterday that we want to be positioning ourselves above the 1.275 since we already have a breakout of that structure happened earlier on. And of course, if you are taking advantage of that opportunity, well done to you for being on standby as price moved significantly. It moved over 48 pips before this bearish momentum began. And what you want to be doing right now is to, if you are still in a position right now, I will be suggesting you close your position right now and get out of this trade at this point in time. Of course, I moved my stop loss as soon as price got into the 1.28. So I moved my stop loss to below the 1.278. And of course, by now I'm already out of that position. And of course, you should be getting out of that position at this point in time. Now, for those who took advantage of that buy opportunity, well done to you for being on standby to capitalize on that move. Now that we started the week on a profitable note, though it's not as significant as we expected. But at this point in time, how do we intend to manage our expectations of the GBPUSD for today? Well, personally for me and from a fundamental perspective, I have been expecting the pound sterling to rise for the past 2 to 3 weeks now. And one of the reasons why I was expecting it to rise, and majority in the market were also expecting it to rise, was one, we had a very positive expansion in the United Kingdom's economy, as we had a GDP data about 2 weeks ago came in beyond expectation, which was on the positive side. And then secondly, we had, due to the inflationary status in the United Kingdom, the Bank of England also increased interest rate by 25 basis points, which makes the pound sterling a higher yield in return compared to the USD, which is currently at a 5.0% interest rate. Now, that margin enough is an attractive window for investors to place their bet on the pound sterling. And for the last 3 weeks, we have been expecting that, but that never happened as price action remained range bound for 3 good weeks. Now, it was not until yesterday we begin to see some traction, which I'm of the opinion should be a platform for more buying opportunities. Now, before we go into the details on how we are going to be positioning ourselves for this week, I would like us to scale up a little bit into the higher time frame, refresh our memories on what is going on there, and of course see how we can use the structure on the higher time frame in conjunction with what we have on the lower time frame to get a well-informed trading decision. Now, scaling up into the higher time frame here, let's see. Okay, I think we started from the daily time frame, of course, and look at what we saw here on the daily time frame. Now, we took into consideration the nature of price action since the beginning of the year, and what we were able to see here was an interesting bullish momentum. And after we connected a series of higher lows, in fact, we had a couple of ascending trend line which has been supporting that bullish momentum. As you will see, price consistently respected that trend line. We saw one happen here in the month of May, and in the last couple of weeks now, price has been retesting the ascending trend line to give us signs that we are likely going to be seeing an uptrend continuation. Now, in addition to the ascending trend line, here was this beautiful key level we spotted at the 1.267, a level which has been a major determinant of price action since the month of May. Now, if you go to as far back as the month of May, we saw how this area was initially a selling niche at some point before we saw the breakout and retest of the structure in the month of June. And since the beginning of the month of July, price action had climbed, find higher highs, and during the first couple of days of this month, we saw price come back into that structure with signs of buy pressure, around this area. Now, one interesting thing about the key level at the 1.26267 is the fact that it also shares a beautiful confluence with an ascending trend line we spotted here. Now you know how we use our ascending trend line in this community. As long as price remains above the ascending trend line, we shall continue to feel comfortable in our buy position while we also look out for more opportunities to buy that asset. Now look at what has been going on here. It appears price action is gradually transitioning into what looks like a double bottom structure, which from a technical standpoint is considered to be a strong technical pattern. And you know, when we have a double bottom structure such as what we have right here, the next thing we want to be doing is to identify a neckline which we shall be using as a yardstick to validate the potency of that reversal pattern. So if we look at the structure closely, a neckline area should be duly situated along the 1.27950, or let's call it the 1.2800 area, considering the round figure of that price, and that's another psychological level to watch out for. So you want to be marking out this level on your chart, the 1.2800 level. As a breakout of this level today, will be welcoming more buying opportunities. So this is our neckline right now, and then if price will break out, retest the 1.28, this will further confirm that we might be in for an uptrend continuation. No, so now our point of reference for today's trading session will be more of looking at how the market participant will be reacting to the 1.2800 level today, and in fact for the later part of the week. So now with the information we have gathered here on the daily time frame, it is appropriate I will scale back down into the 1 hour time frame to see how market participants have been reacting to this current structure. So now scaling down into the 1 hour time frame. Hold on a second. I would like to make this one. Okay. So scaling back into the 1 hour time frame, we have a very interesting setup here. Now, one of the things that we are going to be looking at here is this. Now, remember the 1.28 level we identified on the daily time frame, which happens to be the neckline of the reversal pattern we spotted on the higher time frame. Remember, so we said we are looking forward to a breakout of that neckline to validate the reversal pattern we cited on the daily time frame. Now, look at the structure here. We saw this descending trend line here yesterday, which was one of the parameters that we use to guide our trading activity. And we saw the breakout and retest of the trend line, which was a good signal that price will be going to the upside. Now, from a technical standpoint, following the breakout of that descending trend line, it is expected technically that price will at some point come back to retest that structure in anticipation of an uptrend continuation. Now, if you look at that descending trend line here, it also shares a confluence with this ascending trend line we spotted here yesterday. Now, with that scenario here, it is quite clear that though we have a very strong consolidation phase in the last couple of weeks, but we have been noticing some higher lows within that range. And that is the reason why we have this ascending trend line. So with the selling momentum we're seeing right now, it is likely going to be a retracement of the impulsive move, probably into the zone where we shall be looking out for buying pressure to join an uptrend scenario. Well, and if you are a counter trend trader, well, you might want to capitalize on that selling opportunity in such a way that a breakdown retest of the 1.278 could welcome some selling opportunities into the structure, dovetailing to about 60 pips profit if you are a counter trend trader or a scalper. But for me personally, I'm not joining the sell momentum here, as I want to wait for the bearish momentum to culminate to end before I jump into any uptrend scenario. So I will be waiting at this bust up here to see how the market will react to this area to give me an idea of what to do. And if price breaks down, then we are going to be looking out for selling opportunities. And if price finds buy pressure above this area, then we shall be looking out for buying opportunities to join the bullish momentum to the upside. Then mind you, don't forget the 1.2752, another level which is very important. We want to see how the market reacts to that level too as well. And this is the ascending trend line we spotted on the higher time frame. So let's be mindful of how the market reacts to this confluence between the 1.275 and that ascending trend line. I have a buy stop order above the 1.28, so if price at any point in time begins some bullish momentum here, remember that is our neckline on the higher time frame for a uptrend continuation. How if price drops into this area, anywhere around this area, if we see buy pressure, mark out your neckline to join an uptrend continuation. So on the GBPUSD, I still hold on to a bullish bias here, and not only if price break down this structure here will I think of a strong sell-off in this market. So on the GBPUSD, we still hold on to a bullish bias. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today's trading session. So if you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the last asset for today. And in fact, we're already running out of time. We have less than 5 minutes. Let's see how we can run through that quickly. All right, so in the absence of no questions, let's just dive right into the last assets for today. So the next asset on my watch list for today is my favorite, the XAUUSD, popularly known as the gold spot. And in fact, we have a tremendous movement of price action in our favor in the last 24 hours. Now, let's quickly run through how the week started for us here and what led to the idea of us buying this asset. Now, at the beginning of the week, we saw here price was caught within a range and giving us a flat channel to work with. And of course, we want to be looking out for either a breakout or a breakdown of that range to give us an opportunity to either buy or sell. And with the situation here, we never saw the breakdown of the support line, so it negated the idea of selling, whereas we saw the breakout of the resistance line, which was a good signal for us to look out for buying opportunities in this particular market. So during the live session yesterday, we were around here. This was where we were during the live session, and I told us all that since we already have a breakout of the resistance line at the 1,891, we shall be having a buy stop order above the structure to capitalize on an uptrend continuation. So we saw price initially move about 70 pips in our favor before the bearish momentum began, and price came back into the structure at the 1,888. And remember what I said here yesterday, that the 1,885 had been a very strong buying niche in this market. As you see, when price gets into this level or zone, we saw how sellers always struggled. We saw how buyers came in at every point in time to negate all sellers' attempts. We saw what happened here during the New York session yesterday, which further buttresses the strength of the buyers here. And I hope you did be on standby to capitalize on the breakout of the 1,891. We saw the first one here. If you had missed out on that one, the market was very kind enough come back to retest structure and then gave us this move. And if you had been part of this position, you should be having about 3 positions running in profit right now. We had the first position here at the breakout of the 1,891. We added one more position at the breakout of the 1,896. Then one more position here, which I just identified this morning, had the 1,900. So since the breakout of the 1,891, price action has moved significantly well in our favor with over 100 pips in profit. And if you had added the breakout of the 1,896, you will currently be running with over 150 pips in profit, which is not bad to start the week with. So congratulations to everyone who had been part of this profitable journey. So right now, if you still have your buy position running at this point, it is very, very important that you want to be securing your positions right now, as anything could still happen from this area. And from this structure here, I'm of the opinion that anywhere below the 1,900 and around the 1,897 seems most appropriate to secure or buy positions from this current market structure. Now, with a well secured position, what is going to be our plans for today? Now, the first thing first I would like to state here is that remember at the beginning of the week, we acknowledged that price action has been on a very strong bearish momentum in the last couple of months. As you will see, we have trend lines to after connecting the series of lower highs to confirm the strength of the sellers. And yesterday we saw the breakout of that trend line, which is a very beautiful signal that we are likely that the trend line may no longer have the capacity to continue to negate the bullish attempt, and at the same time giving us signs that the buyers are getting stronger by the day. So with the breakout of this trend line right here, will price action come back to retest the structure, which also lines up with this ascending trend line here to incite another uptrend continuation? Well, that is a question that will be answered if price action at any point in time breaks down the 1,900 level into this area, which could be a very good counter trend opportunity for you if you are a scalper or a short-term trader. But for me personally, I wouldn't be considering selling here. As you know, we have a breakout of the descending trend line here, and from a technical standpoint, when price breaks out of a trend line or a structure such as this, we expect price to come back and retest the structure to incite another wave of bullish momentum. So I would rather wait for the bearish momentum to happen, to culminate, and look out for buying pressure to join the uptrend continuation. So at this point in time on the XAUUSD, I remain very bullish. And for those who hope you have secured your position anyways, if you have secured your position, fine. So for today's trading session, how do we intend to manage this? And for those who had missed out on these opportunities, how can you capitalize on this one? Now, looking at this structure, I had a new level here at the 1,900, another psychological level, which was a strong demand zone at some point in time. Let's look at that quickly together. I think on the on the daily time frame, let me see the 4 hours. Okay, on the daily time frame, let's look at the daily time frame. You can see the 1,900 area. Look at this area here. Had the 1,900. It was a strong demand zone at some point, and look at where price action is right now. Price action is right back at that zone. So are we going to see a retest of that structure to incite a sell-off, or is price going to climb above the 1,009 to use it as a platform for an uptrend continuation? So it's a very big question we want to be answering here on the 1 hour time frame. So this is the 1,900 area here. So we want to see how the market will react above this level. Now, for those who had missed out on the opportunity at the breakout of the 1,009, let's see if the market will come back to retest the structure. And if it does, we'll look out for buying opportunities to join the uptrend continuation. However, if price breaks down the 1,009, then selling pressure below that structure will incite selling opportunities. Remember, I told you I'm not going to be selling, but if you are a counter trend trader, a short-term trader, you might want to capitalize on that move. I think it's about how many pips move that is. That's about 90 to 100 pips move to catch there if you feel comfortable taking counter trend opportunity. But for me, I will be holding on to see how the market, where the sell momentum will end, and check out this bust up here to see how the market will react to that level. The 1,896 also is an area to look out for how price will react to that level to join an uptrend continuation. So these are my views here on the XAUUSD for today. Then another thing here is the highest point where price action has been this week, which is the 1,904, which we can also capitalize on to add more position to our existing trade. So 1904 duly marked out on the chart. You do want to be marking that out yourself on your chart right now, as we will be using it to capitalize on an uptrend continuation if price action breaks out of that level. So these are my views here on the XAUUSD for today. It's a very simple setup. Let's use it to our favor. Let's capitalize on the potential opportunity that lies ahead during the New York session today on this one. So if you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we draw the curtain for today's trading session. All right. So in the absence of no questions, I want to take this as a confirmation that we are on the same page and good to go. And in fact, I'm very confident that we are well equipped to be able to take advantage of any potential trading opportunity lining up for us today during the New York session. So we were able to take on 4 financial assets for today. We took on the USOILSPOT. We took on the USTech100, popularly known as the gold spot, the NASDAQ. Then we took on the GBPUSD and of course the XAUUSD. So let's see how the market will play out. I wish us all the best of luck. And for those who are joining us for today, I do hope you are able to gain 1 or 2 things from what we discussed here today. But trust me, the more time you spend with us, the better you get in understanding how things works here and be able to use the information you have gathered here to eventually make your own independent trading decisions on your account. So I look forward to seeing more of you tomorrow, same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye-bye.